welcome back to Market Day. Don't forget you can join in on the conversation. Any questions, comments you might have, or on Twitter, just use hashtag MKTDAY. Now our guest host today, Kieran from Sirius Fund Management. And for more on commodities, in particular the coal sector, we're joined by Jason Brewer, Executive Director of South African-focused coal miner Continental Coal, and Jonathan Barrett, Managing Director of Commodity Broking Services. Now, Continental Coal today announced it has notched up a fifth straight quarter of thermal coal production from its mining operations in South Africa. And following on from that, Jason, might start with you. Could you tell us a little bit about the company?
Yes, sure. Look, we've been focused in South Africa now for the past 18 months, and we started our first mine barely 12 months ago. And since that time, we've been both producing coal for the domestic and the export market. This month, just passed in May, we produced our millionth tonne of coal, which was sold into the domestic market. We've got 2 mines producing. We've got a further 2 which we're looking to get into production over the coming 12 months. So we're at at the start of a very big growth phase for us.
Obviously, a lot of focus at the moment in terms of Africa and its mining landscape. What is it like as a market to work in, to operate in?
Oh, look, it clearly has its challenges, but I think we've gone into it with our eyes wide open. We've got a purely South African operating team based out of Johannesburg, operating 2 mines which are based in South Africa's principal coal mining region there. So we're operating in an environment where you've had over 100 years of coal mining activity, an area which is very well supported by the communities, and where you can access a lot of infrastructure, be it both the rail network, for instance, probably one of the most efficient in the world, going through to the Richards Bay Coal Terminal, one of the largest dedicated coal export terminals.
Jonathan Barrett, a lot of focus at the moment, as I mentioned, in terms of Africa, and in particular some of the coal operations. Riversdale, probably one that most people know of. Is it something that is going to continue, an area that's going to continue to rise to prominence?
Oh, yes, I think it will. I think when you look at what's happening around on the global basis at the moment, particularly when it comes to power shortages, particularly in Africa, and also power shortages certainly in China, we find that the thermal coal is probably one which is best sort of, and I think the prospects for more merging and more acquisitions, more takeover activity in the sector certainly remains relatively robust. We actually have a good outlook for coal at the moment, remain relatively positive, particularly on the back of a lot of the power shortages where we see demand will remain quite strong.
Jonathan, there does seem obviously a lot of interest in coal at the moment. We saw a bit of a price spike on the back of those Queensland floods and some of the crimping of production. But with all this, I suppose, people trying to dig for coal and produce it, is there an impact that's likely to have on the price, particularly with some of those Queensland, Northern New South Wales production coming back online?
Yeah, you would like to see that. You would certainly like to see prices actually taper off as a result of more supply coming onto the market, but we're continually seeing more demand coming out of Asia, and I think to me that's the balancing act at the moment. And I think whilst China continues to have power shortages, we're actually expecting the power shortages to increase. As a result of that, the increase in supply we get from our domestic market, I think, will be well and truly placated by the demand we get from the international side. So yes, it's good to see, but I'd like to see prices actually steady off, but at the moment they actually feel as if they should be well supported and will probably continue to climb higher over the coming months.
Jason, whereabouts do you stand in terms of the outlook for the price of coal, and where the most demand is going to come from?
Oh, look, I think you've certainly seen the majority of the South African coal heading up to the Indian subcontinent. I think for the month of May, some 36% of the exports out of Richards Bay went to India, and roughly 25% the month before. So I think that's where the majority of demand for the South African coal will certainly come, and you certainly don't see any lack of demand coming from there. From a pricing perspective, I think been one of the better performers over recent months. It hasn't had the inherent volatility that some of the gold or some of the base metal pricing has. And look, we've been exporting since the beginning of November of last year, and have consistently achieved in excess of 120 US a tonne. So at those levels we're getting quite robust margins, and clearly we're very happy for that to stay in that range.
Kieran, is the coal space here in Australia, and I suppose other Australian companies, listed Australian companies, but operations offshore, is it an area that Sirius likes?
Well, up to a point, but one of the things that we're nervous about is the impact of the carbon tax here in Australia and how that's actually going to work. And one of the things I'd be very interested to ask Jason Brewer is, Does he see much trade-off between the fact that thermal coal is a substitute for uranium as an energy feed into a power station, and uranium stocks here in Australia have been the worst performers of just about anything. So does that mean, does he see a longer term switch out of uranium? I can't understand it. I think uranium is over, the uranium thing is oversold, it's overdone. I think thermal coal's always going to be part of the picture, but I think uranium's always going to be part of the picture as a feedstock for generating electricity. I'd be interested to know what he thinks. Do the thermal coal producers think uranium is gone as a competitive force in their space?
Jason, what do you think?
Oh, look, I'd agree with you in that a lot of uranium stocks have been oversold, but I think, headline-grabbing news such as Germany's decision to phase out its nuclear program, that's created an opportunity now for, I think it's 10 gigawatts of new coal or gas-fired power stations to be built in Germany. And clearly that has a huge impact on demand for thermal coal going up through to Europe, which has, up until the past couple of years, been the primary destination of South Africa. Uranium will clearly have its position in the market. It's interesting that South Africa has also phased out its uranium or its nuclear program as well. So, look, it will be there, and clearly the push by countries such as China to increase the number of reactors will clearly take a significant portion of the supply of uranium in the market. But as the other panellists mentioned there, with so much demand throughout Africa, even in southern Africa, for the domestic consumption of coal, you can't see the outlook for thermal coal going, certainly going south. It's a very positive outlook in my mind.
Jonathan, what's your take on uranium? It seems it can be a whipping boy, or it can be the hot commodity at the moment. It really has some vicious swings.
Oh, look, it certainly has. What I'm actually viewing, what we're actually seeing too, is an uptake more in the natural gas market. Obviously, with the emissions arguments continuing to go out there, natural gas is one thing which I think will compete for thermal coal. I actually feel that the uptake in natural gas probably will succeed thermal coal going forward, but I think thermal coal certainly still has a place, and a very important place, over the coming years. But I do see a lot of catch-up coming with natural gas, and natural gas, where the prices are at the moment, I think it still remains a very cheap alternative, not only cheap from a pricing perspective, but also very cheap from a carbon emissions perspective. So when I look at the spread at the moment, I think I'd probably bet on the natural gas side over thermal in terms of price appreciation over the coming year.
Jason, is that a concern? I suppose an extension from that, obviously the carbon debate, a very big one here in Australia. Is there a debate in South Africa?
Far from it, no. I think you've got a country such as South Africa, which has over 90% of its power generation coming from coal-fired stations. It's part of a broader outlook, but it's certainly nowhere near the front pages that it is here in Australia.
What about threat of natural gas as I suppose, something to rival thermal coal?
Oh, look, clearly, I mean, the competitiveness from a pricing perspective is critical. I think with natural gas, clearly the infrastructure which is required to be installed, the various pipelines and so on, will clearly take up a lot of capital. I think coal will continue to be one of the cheapest, if not the cheapest, forms of power generation, particularly in Africa. So broadly confident of the position that we have in the market there, and getting into the export markets as well. But certainly we're cognizant of it.
Kieran, what's your take on I suppose, a lot of the coal seam gas, if you like, LNG, shale gas now is another one that's obviously getting some headlines. Woodside, Shell, all Santos, Origin, these guys pumping up these alternative energy forms.
Well, the whole mix, I think one of the things that's going to come out of the Japanese situation is a more diverse mix. And I think most of the Western industrial countries, possibly with the exception of South Africa, I'm not sure there, but I think it's going to become a much greater source of supply, and it'll include the greens and the renewables such as wind and what have you. I think coal will always be in the mix, and increasingly gas. I agree that gas will probably end up out-competing everything, because it's clean and there's so much of it. And with gas, a lot of it is in places that are politically stable, whereas oil is in places that almost are endemically politically unstable. So we see gas as a big comer. But I think longer term, I also see a big comeback in uranium. because it doesn't just have the, even if you burn gas, it has lower emissions, but it still does have emissions. If you want a perfectly clean, disposal issues aside, form of power generation, then uranium's got to always be in the mix.
I want to quickly go back to, I suppose, Old Faithful, if you like, in terms of fossil fuels. Jonathan Barrett, a big meeting of OPEC overnight. We've seen what the oil price has done. We've seen what some of the energy stocks have done in anticipation. What are you expecting?
Well, I think it's going to be quite contentious. We are hearing rumours that they are looking for an increase in production. I guess it's sort of one of those things where we just got to wait and see. I'm also looking for a change in rhetoric in some of the wording that we get from OPEC. But at the moment, we're speculating that there will be an increase in production. I think we'll have to be guided by what the price does. But I say that's certainly on the cards. My personal view is I think that OPEC really just want to see it oil within a trading range, 95 to 105, and then they will act when the price of crude actually breaks out of that. But let's see what happens.
Do Iran and Venezuela, are they a bit of a swing factor in this? They don't seem to like the idea of an increase in production. I think they like the oil prices being.
That's correct. But Saudis, a lot of pressure from Saudi at the moment because obviously they're acting to what the States actually wants as well. And when you look from that perspective, they're looking for an increase. And I think the numbers are about upwards of 1 million. So I think when you combine, if they do get that increase of 1 million, and you combine with Gaddafi or the demise of Gaddafi eventually, then you've got a lot of oil on the market. So probably would like to see prices a little bit weaker from here.
All right, gentlemen, unfortunately, we do have to leave it there. So I want to say thank you to Jason Brewer from Continental Coal and Jonathan Barrett there from Commodity Broking Services. We are going to head to a break, but coming up, Andrew Bosman from Bell